Okay, well, I think we're going to get started. Tonight we have Dr. George Haynes. He's one of our extension specialists in ag economics. I asked him to talk about how to make more money farming. I think my theme for this year was just ask ridiculous things of our specialists. So we put together this talk in response to my ask. So I'll give the mic and yeah.
If it's on.
Yep.
Can you hear me?
Yep.
Okay. Yeah, thanks, Adrian, for your introduction. Great to be out here. We have been doing a very few in-person lectures for quite a while, so it's great to be able to come out to Conrad and talk to you guys about a topic that probably everybody's concerned about is how do you make more money in agriculture. I'm going to kind of come at this from just a little bit different angle, maybe, as we kind of go through some different ideas on primarily on risk management sorts of things, but we'll kind of get to there in a few minutes. So what do you think about, it was a pretty amazing day in the world politics today. So, yeah, that's kind of the thing that talked a little bit about those sorts of things going on. So with that, can you still hear me? Oh, okay. Well, maybe I should.
Yeah.
That might help. Okay, we're gonna touch on different. There we go. We're gonna touch on 3 different topics today, and we'll kind of. As I was driving up here was spend some time on something other than a livestock example. But anyway, so I'm going to kind of give you an economic sort of story with this. I kind of I spent a lot of time thinking about kind of supplying and demand the way. I think the market is so much more important than everything. And sometimes you think about, oh yeah, what's the administration going to do in Washington? Or what's the government going to do? I think you get the there. That's pretty much I've been talking about public policy today, but we look at talk about monopoly discussion out there right now about what's going on in the cattle market. Having monopoly. All are in breaking point. I appreciate the issues around the things going on in the cattle business. These days, it's data that's out there now that's really taking a look across places. So anyhow, I'll get this organized here. Okay, so we have kind of this is like the list of things. We're going to go over the first one very quickly here. I'll tell you why in just a second here. One of the things we're trying to do right now at the university, right, for staff, but we want to think about this in terms of taking good ideas that people have and commercialize those important. When you think about what could Montana State do? In our college of agriculture. Well, that's kind of a tough question. I mean, I throw on with them. We're commercializing what we do at the university. A lot of universities on the shelf. But we'd like to figure out how to commercialize some of that. Working with one of our full technology and think about, well, how big a deal could that be? Well, I think this company is thinking about buying his business from him. He's just going to license it to them, so all this money isn't coming his way. But maybe that project is worth $170 million or something like that at some point. So, there's stuff like that that's there that around, just in the agricultural orbit that we're beginning to think about a little bit more and how we might help people that are at the university as well as people that are out here in the communities that have ideas that they want to see us begin to work on and think about. Perhaps maybe one of those would be commercialized at some point in time. So I think I'm going to skip a little bit of this. We're working on putting an organization together. It's not part of the university. It's another organization that sits beside the university to help people to come up with good ideas, to help them get those ideas reviewed by somebody. A board of directors will be the people that will do that and assist them in developing. They talk about this in terms of scaling up to make sure that something you can do in a test tube, you can actually do commercially, and then in fact selling that to somebody downstream. So That's kind of one of the things. In fact, I'm spending almost all of my time on this particular issue right now. So it's an interesting thing for us to think about. Although I don't think Okay, so let's take a look at a little bit about the agricultural outlook here in the state of Montana. This is kind of what things look like from an economist's point of view, at least, as we finished off 2021 with, about a little over $4 billion worth of production in Montana. As you can see, kind of an average year for us here in the state. You say, well, how can we get to an average year? Well, unfortunately, a lot of our producers here carry enough crop insurance or livestock insurance that didn't turn out to be too bad a year. And on top of that, we'll talk a little bit about wheat storage here as well. That allowed us to have, cash receipts that were, kind of on average about, somewhere in the middle, at least this year. Oh, let's see here.
The last night, the technology doesn't want to work. Okay.
There we go. A pretty good year for prices. All you guys, I don't need to tell you this information. There's been a decent year for prices. It looks like, and as we'll look at that in a few minutes, futures prices also look pretty favorable, going forward. So pretty good year price-wise, especially in the wheat market was pretty strong. Winter wheat market in particular. Cattle market was a little bit more lethargic in the sense that there really wasn't a lot of movement in the calf market, and we kind of measure this with feeder cattle market, but the wheat market was pretty good year for them. And again, I don't need to tell you guys very much about this either. It's really a lousy production year here in the state of Montana. Doesn't matter which commodity you took a look at, everything was down. This one here, just looking at winter and spring wheat and barley, all of those was a really challenging production year. My family farms down in central Montana, down at Judith Gap or around there, and so I get a chance to hear about this all firsthand. The one thing that salvaged the cash market, I think, or cash receipts in the state, at least this is the only information we have, is on the wheat market, but you can see that the wheat storage really declined as you got into 2021, as people were sold off a lot of wheat. Just to kind of keep bread on the table. So it was one of those years where people really did go pretty deep into their storage. Just with on the Pulse market as well, same story. The other part of this that's been really important, I think, more recently, has just been this input market, and this is a story. And again, you guys are we're readily aware of what's going on here, but all these fertilizer prices are up. In fact, this takes us out to, kind of mid 2021, and these fertilizer prices have moved well beyond there. I think I was looking at urea prices the other day for $8.95 a ton, diammonium phosphate $8.59, and potassium chloride up just a little bit over $800 a ton. So, a lot of movement in fertilizer prices. This one, which one? This right here. This was urea prices, I think. Yeah, I think urea was the first one on the list up here. So it would have been, what's that? In 2008, I don't know off the top of my head. I'd have to think about that. I don't know. Well, it was the year. Yeah, it was the year that we were in the kind of second year. Well, the first year of the recession. Yeah, 2008 and 9 were the recession years. So it would have been right about the same time. And I don't know what was going on. I'll have to think. Maybe before the night's out, I will think of something that caused those urea prices to go so high. But yeah, fertilizer prices in general were pretty high as you look across this. So, oops, let's see here. So what's this story going on in fertilizer? I think it's a pretty interesting story. It got a lot more interesting today, actually, with all this activity going on over in the Ukraine. But prior to that, the story, especially on the nitrogen fertilizer piece, was this issue around coal and oil prices, really escalating. And there's a host of reasons for, some of that happening. Some of it's political, I think. I started off by saying politics didn't matter, but I think some of it is a little bit political and what's going on between Russia and Saudi Arabia in particular, and their lack of interest in raising production. So that certainly played into higher oil prices. Some of in the United States, I think if you look at the Permian Basin down in Texas and also out here in North Dakota, that I think some of the fracking that was going on before hasn't produced quite at the level that they thought was going to. So there's been less production there, and there's been a little less drilling there as companies are debating about whether they want to get in and drill some more because it wasn't financially quite as good as they thought it was going to be. And some restrictions put in place with drilling on public lands. So there's all these things that have happened that have caused oil prices to go higher. Phosphate market was a little bit different. I think it's been an issue with exports coming out of China have been down. There's less production coming out of Europe. There's been this issue with Russia not shipping, and I don't think it was necessarily they didn't want to sell to us, but they didn't have shipping capacity to ship phosphates out of Russia to the U.S. So, and that's going to get a lot more complicated here in the near term, I would suspect. So, my guess is we're going to probably see, at least from the supply side, higher fertilizer prices probably across the board for a while until it settles down. On the demand side, there's really strong demand in India right now for DAP, for ammonium phosphate. We're doing a lot of inventory replenishment here in the United States. Inventories have been low, so there's been quite a bit of demand there as well. And then high commodity prices. Sometimes we forget about that, but you get high commodity prices, you're going to drive fertilizer prices up as well. So we're back in all those things are contributing to this market. Thought I'd just take a brief look at kind of where we were at on last Friday versus where we're at today in terms of prices. And as we talked about the outset out here, things have changed a little bit. And the action up here, the red is today's prices, this morning before I left Bozeman. And the ones right below there are from last Friday. So where's all the movement been here? Yeah, there's been a lot of action here. You look at hard red winter, at least I get all my data from the Chicago Mercantile Exchange, but this is Kansas City wheat. And, you're looking at these prices going up, over $1.50 over the weekend. Like last night was probably a big item. Corn prices up as well. So the corn and winter wheat seem to be the story. The spring wheat prices actually have declined just a little bit. The futures prices, as you look out to December, kind of edge up just a bit, but really not very much going on there. But they'll be really very interesting to watch in the next couple of days here, as I think people are concerned about what's going to happen in Ukraine with, spring plantings coming up and so on. So we'll see what happens. On the livestock side, again, you're well aware of all these challenges that we have here. We'll come back and talk about livestock in just a little bit, but this drought has had really major repercussions here in Montana in the cattle market. It wasn't so long ago, we had the same thing going on in the southwestern part of the United States. We'll talk about that in just a little while here, where we saw, calf prices went to nearly historical highs with that drought that they had there. Hopefully, we're not going to see a 3-year drought here in Montana. But at any rate, we've had a challenging year here for sure. In addition to a whole bunch of supply chain issues, we'll talk a little bit about those as we think about some of the things that are hot on the minds of people here in Montana, especially with the Montana Department of Ag, is very interested in small slaughter facilities. These little portable facilities, they've had $7 million they have allocated to develop some of those. There's There's a processing facility thinking about going into Billings. I mean, there's a whole bunch of talk around what's going to go on with livestock, with especially processing or slaughtering and processing. So we'll kind of see where some of that pans out here. In terms of the issue, I think on the, at least in the things that, that my family has been dealing with is just within hay prices in general. You can see here, the last time I gave a talk on hay was back in September. Prices had got up in the low 200s. That's pictures changed substantially. You think about those hay prices usually being down, around, I always think about, grass hay $100 a ton or so, maybe alfalfa 100 and a quarter, $150 a ton. This is a lot different. I went out and looked at hay prices today. Before I came up here, everything's at $300 a ton or more. And it doesn't matter what you're buying right at the moment. You can be buying small squares, big round bales, but it doesn't matter. It's all going to be in that $300 a ton sort of range. Where our family or my brother-in-law was getting most of our hay this year for his ranch, at least out of Canada. There was not very much of it coming out of Montana. They found this Facebook source out there that allowed them to find hay, they felt very fortunate for that. In terms of the cattle market, if you look at the same things that I did for the wheat market, back on one of the other slides, this is the same thing for the cattle market. You can see not very much happening there today as a result of this business going on in the Ukraine. And we'll have to see as we see corn prices creep up and some other things like that go on, there'll probably be some impact coming back on the cattle market, I would suspect. But really at this point in time, it doesn't look like there's much going on. Maybe a little bit of, just very consistent prices really across the board. So the other thing that's out there, this just came out a couple of days ago to give you an idea of about what's going to go on. And there are many times I'm really reluctant to talk about this. Nobody knows what's going to happen between now and 2031. Nobody. I mean, and agricultural economists are no better at predicting than anybody else. But there is a study that's out there by the USDA right now to give you a sense about where they think things are going to go over the next, 8 years or thereabouts. So here's kind of the story. This is just U.S. farm income here. As you can see, farm income has been pretty steady across time. There's been some peaks in here. 2021 was a pretty high year. We'll talk about why that was in just a minute here. So that's a pretty good year. There were some pretty good years back here. This is the situation in the southern part of the United States where we had the drought there and cattle prices went off the charts for a while. Grain prices were also high. So it was a year of lower production in some parts of the U.S., but prices kind of took care of that. But in general, it's been, it's trended across, not with too many, bumps along the way here. The red line is just cash, the same cash receipts data that we looked at for Montana a little while ago. The blue line is net income, net farm income, which is really probably the thing you care about the most. You don't really care if you're looking at revenue only, but you want to look at costs as well. So net farm income gives you a picture of that. If you look at whether the U.S. farm economy is financially stable, this is a pretty good measure of that. You can look at the debt to equity and debt to asset ratios to figure out how we're doing. It's one of the hard things, by the way, when you try to lobby for farm legislation to provide more subsidization to farmers, because in general, they look like they're doing pretty good. I'll be willing to bet you that you don't have too many businesses that are on downtown here in Conrad or any other community in Montana that probably have debt to asset ratios in this range. These are very healthy debt ratios when you think about, is the business going to be solvent or not? So one of the challenges with that. The story that has been important in 2000 and 2021 has been that there's been a lot of subsidization that's flowed into the agricultural markets. Here's what total subsidies look like if you go back to 2000 across probably around, I tend to think about farm programs being in that $20 billion sort of range on. But look at, as we move across here, you can see as we moved into the last 3 years of this sort of story here, we had, starting in 2019, we had all those MFP payments, you know, for the trade deals that we were trying to negotiate with China in particular, didn't do what they thought they were going to do. So there was this market facilitation money available. And then we cruise into the 2020. And of course, that was all of this COVID money that showed up over there in one form or another to compensate businesses of all sorts with, you know, for receipts that weren't very high. So we ended up getting a lot of disaster aid. And the disaster aid payments also spilled into, you know, 2021. So we had this period of time there where we had an enormous amount of money coming in the form of a subsidy. And I think you want to be, you know, you want to be cautious of subsidization. I cut my teeth in the business world, in the computer business, and we didn't have any, we had no subsidies that came our way because national security wasn't an issue for what we were doing. But I think you got to be careful with subsidization because subsidization, it can be very important to keep people afloat. I understand that. That's really important. But on the other hand, and we'll talk about this a little bit later, but you want to make sure that you're not getting in a situation where subsidization is making you a lot less efficient at what you do. And there's some pretty good stories in this economy of that. Harley-Davidson motorcycles, probably one of the better ones, a company that received a lot of subsidies and, you know, nearly went out of business as a result of that. So it's there's some important considerations here. So what are the forecasters thinking about with subsidization? You know, here's kind of where we're at right now to give you an idea of we just come off of 2021. And, you know, my guess is that subsidization at the levels that we've looked at more recently probably aren't going to happen for a while. It'll be interesting to see what kind of the politics of this are as we kind of get into the new farm bill will be up here in 2023. And there's going to be a lot of discussion in the near term here of how we're going to respond to what's going on in the, you know, in the Ukraine. So, at any rate, this is kind of the forecast of getting back to something a lot more normal, I think. I don't know if I necessarily see $5 billion worth of subsidization where I would, I'm not necessarily sure that's where we're going to be at. We're going to be, forecast is that we're going to be seeing something less. So, just one other picture here when we think about subsidization and crop insurance is one that's you know, important to me because if I were to design farm programs, I think I'd design really good crop insurance and good livestock insurance programs, and I would probably get rid of most everything else. I just think they're really important to the farming community. But there's a lot of subsidization attached to those things as well. The last big crop insurance year we had was going back in 2013, but more recently, you know, we've been U.S.-wide have been substantially less than that. The important part about crop insurance is that it's a heavily subsidized product by the U.S. government, though. Anybody want to take a guess of where the subsidy levels are at with crop insurance? If you're paying $100 for a premium, how much of that's subsidized by the U.S. taxpayers? About $60 of that. So, and they did that purposely because back when they started crop insurance, they just couldn't get anybody to buy it. So then they started providing some incentives for people to buy it as they got into the 80s and 90s. And finally, they've arrived at a point where they, you know, a large percentage of U.S. farmers end up buying crop insurance is because the subsidization levels are high enough. It's a pretty good deal for you in almost all cases. I deal with one producer over in my neck of the woods over in western Montana that is self-insured, but it's a family business, has been around for a long time. And they just don't feel that buying crop insurance is probably needs to be part of what they do because they work on a scheme where they prepare for a major downturn, either prices or yield every 3 years. And so that's kind of what they do. They self-insure themselves in that way. So we won't spend too much time on this, but this is kind of where farm policy, at least from our vantage point in the department, in Bozeman is headed as far as we can tell. You know, there is more interest in the World Trade Organization, I think, now than there was probably in the last administration. There's seems like there might be some reasonable attempt to roll back kind of what we had going on over in China, or maybe to change that relationship that we have for selling commodities there, where there have been some successes there and some that haven't been so successful. To get rid of some of the lower profile trade issues that we've had, especially with Canada and Mexico, look like they might be on the docket. And there might be some interest here, I don't know about number 4 on the list up here, about getting more better relations with some of the countries that are in a part of the old TPP, the Trans-Pacific Partnership, that is still alive. And there's been some interest in the U.S. maybe joining or becoming part of that. So I don't have a list of all the countries up here. I do on another set of slides that I have, but not here. Well, here we go. All these countries here are all the ones that are part of that agreement, and you know, maybe it would open up some additional markets for us. I don't know. I didn't go back and look at how much trading we were doing with each of these countries that are currently participating in that. One thing that'll be important, I think, in the near term here is a lot more interest in conservation programs right now, with both the Conservation Reserve Program and Conservation Stewardship, even with the EQIP program, more money in those pots. So we'll see where some of that goes. There's a lot of interest. If you're, haven't been in the farming business for very long, there's a lot of beginning farmer money out there. If you want to take advantage of some financial support, is what it manifests itself in. So that could be important. Nutrition programs are, maybe getting a little bit more play. And then finally, there's the one that's got a whole bunch of attention here is reaching out to socially disadvantaged producers, and especially with Black and American Indian or Native American producers, with more money kind of being tossed their way. So, okay, I'm not going to spend too much time. There's 10 of these habits to go through, but if you're, I thought 3 of these was probably about all anybody could handle at one stretch. So we'll talk about 3 of them. Not that the others aren't important, but I think they're, this is a study that was done to look at what are the habits of people that, do pretty well in farming. What are profitable farmers engage in? And this is kind of the list. But we're going to talk a little bit about operating systems here in a minute, and then we'll talk just a little about a couple of different, issues around the finances that I think are really important. Okay, this one on the systems, I think one of the issues that I've seen with working through bankruptcies with farmers, which I did a fair bit of this back in the 1980s when they, through some of the farm crisis, was people trying to figure out exactly what they were doing in these farm businesses. And, I think it's useful to kind of figure out why you're in business. And there's a lot of reasons to be in business, but as I tell all of my students that I have to work with in small business issues primarily, if profitability isn't one of them, being in the farming business or any other business is probably not a good thing for you to think about doing. Profitability becomes really critical, because if you're not profitable, you can't do anything else. And so I focus a lot of attention on those sorts of things. What are your long and short-term goals in the business that you have? And then what about all the people that are associated with the business that you're involved in? I think about businesses are generally family businesses if you're in a farmer ranch situation, and how do you then make sure that everybody's reasonably content with, being a part of this business that's called a farmer ranch. So you might think about it in these terms, in 10 years, my farm will be producing X number of cattle or X bushels of grain. We'll be recognized for something that we do, and then we're pursuing these activities because we think they're important, for some reason. And agriculture is very fortunate. I mean, you're feeding the world. I mean, what other reason can you think of that could be more important than, providing food to the world's population? Just thinking about these, and just another way, what do we do? How do we do it? Who are we doing this for? And then what value are we bringing to the market with all of this? Probably one of the most important issues, I think, for families that are living on these farms is to take a look at who's all involved in this farming business with you. Most of the bankruptcies that I had an opportunity to work on were cases where there were more than one family that were involved in these ranching and farming operations. And their family, if you're on one of these operations, your family, you're part of the ownership of this business, and you might also work in the business. So you have all of these things that are going on there. And there's some parts of this that can be really, very tricky if you end up with more than one family that's living out there, or more than one family that thinks that they need some money from this ranching operation that you have. So if you think about this picture that's up here, where can you see the most? Where can you see the most trouble brewing, do you think? Which one would worry you the most if you're the owner of this farm and or ranch, and you have some other cousins of yours or family members that think they need some money out of it? So which one? Okay. 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 So, okay, you're right on target because you're part of the family. You own part of this business, but you probably don't even know where the farm is located because you're not working out there. And that's one of the issues. A couple of the bankruptcies that I was involved with were people exactly in that situation where they were making money. The farm was doing okay, but they just didn't have enough money in lean years to write that check to their cousin John over here that needed his $40,000 from them. And if he wasn't going to get it, he was going to come and legally get it, extract it from you, through some other channels. So number 4 is really the issue, I think, is I see it on this of making sure that you have a business that's there that's going to be viable, and viable for you as a big person that's out there working at this business and trying to make a living off of it. The other part of this that I think is really important is just the culture of your business. And there's some core values out there I think are really important for any business venture. And again, this was another theme of these businesses that went bankrupt, was that sometimes the culture out there on the farm wasn't very good. They had been messing around with the fact that nobody could trust them. They weren't really accountable. Made promises they never kept, all this stuff down the list here. They weren't paying taxes a lot of years because they just didn't feel like paying taxes. They thought it was a good way to save money. But just all those things breed a culture that's not very positive. At the end of the day, they end up in situations where people are not treating each other very well on the farm or ranch, but they're treating them just like they've learned this from their behavior that's not been very good as they've dealt with other people that are associated with their farming business. So all these things make for a decent. The one that's most important, the top one. Yeah. Because I think in general, and I would probably, well, I think if you're in business with certainly family members or other people that you're doing business with, I think you want to treat them fairly. I think that's really important, but that kind of comes into the same topic as being honest with people as well. If somebody's earned a nickel, you're going to pay it to them. But I think I think that's a good point, though. And fairness is an important one as well. Maybe I should have said these are all equally important, because in some ways they probably are. Yeah, yeah. Well, it makes for a really good culture on the farm. I think if you have these things going, and I always tell people I grew up, well, I didn't really grow up on this ranch that my dad was associated with because we lived in town, but it was this situation where there were three partners involved in this, and two of the partners couldn't get along with one another, and it kind of split our family, kind of right down the middle for years, until one of the partners was diagnosed with cancer and decided it was time to make up to this guy that he couldn't get along with before, So, it can take on some pretty ugly sort of situations at times with if you don't have pretty good core values in the way the business is operating. The other one that's important, I think, ethical, just having a really high standard of ethics, and this goes back to kind of the honesty situation I was talking about before, but telling the truth and don't do things where the end kind of justifies the to think about where that really matters. Oops, I think I'm out of. There we go. Okay, the other one, the second one of these is more getting on with what Adrian wanted me to talk about. This is how you're going to make more money in agriculture. Well, there's probably some ways to think about that in a very simple way. You could either have higher prices. You have, constant, if you don't know what your cost of production are and you have higher prices, you're going to make more money. If you can produce more, you have kind of on the same amount of money you're spending in producing a crop, you're going to make more money. You might get involved in some value added. If you thought you wanted to, buy one of these small processor trailers or decide to set up some kind of facility for, I don't know, processing lentils or whatever you might be doing. I think there's things like that you can certainly think about. If you kind of look within the framework of, kind of what you're doing on your own operation already, which I think is a really good place to start when you think about how am I going to make more money out of this. One of the most important things to do is to know what your cost structure looks like. There's a pretty good place to go out and look at costs. We don't do cost of production studies, or we haven't in our department for quite a while, where I think that's going to maybe change here in the near term. But North Dakota, we depend on the Western North Dakota budget estimates. If you go out and Google North Dakota crop budgets, you can go out and see kind of what their estimates are of what their enterprise cost studies look like and where they think there's going to be money in agriculture. So there are places to go for that. Pay attention to what consumer demand looks like. I think there's some producers that are more concerned about that as they think about what can if I'm going to do some rotation changes on my farming operation, what's the demand look like for that? One of the early bankruptcies I was a part of was there was some people down in southwestern Montana that were going to raise Jerusalem artichokes. And they came to us and they asked us to look at doing a feasibility study for them. We said, hey, there's no data around on Jerusalem artichokes. I don't know what they're worth. But yeah, this company convinced them to go out of a rotation with their potatoes, plant Jerusalem artichokes in there, and they were going to guarantee them a market at the end of the season. Well, came the end of the season in August, September, and those guys were long gone. And so here were these potato producers, or this one potato producer that we were working with that had no income. He had lost everything, and over the next, 7 or 8 months, he was out of business. While we're making this run at something where nobody knew what consumer demand looked like because there was no prices. There were no futures prices, obviously, to look at. There was no contract prices that were, valid either to look at. So For some of you, I think futures markets might be useful. Any of you guys doing any work on the futures, doing any hedging or speculating on the futures market? Well, I think in this environment that we're in right now, some of the people I know are, pretty active out there at the moment. They're looking at some of these relatively high livestock prices and grain prices as well. But I think the thing about playing in the futures market, make sure you have a good banker that understands what you're doing, because the average person, probably not going to want to get in that market unless you're financially pretty well set up to manage that. But for some, a place to go. Here's the best story in pricing, I think, probably over the last, at least in my time working at the university, has been looking at these cap prices from 1913, the most recent one up here in 2006, or really in 2013, 13 and 14, where, there was this story going around saying, well, we've never seen, calf prices quite this high in Montana. Well, the fact of the matter is we've seen it quite often. There had been 3 other times prior to this uptick over here in 2012 and 13 where there'd been relatively high livestock prices here. One of them kind of was around the time that the Russian grain embargo that happened here, back in here. So there were some things that had happened that had caused these cattle prices to go really high. And so as we were looking at here in 2012, 11, 12, and 13, people were saying, well, the livestock rate, the livestock ranchers here in the United States are going to be driving Ferraris because prices are so high. And that went on for a little while. You can see how skinny these things are here. For about a year, that was a pretty good story. Starting at the end of the year here, the USDA reported that cattle numbers had rebounded from this drought that had happened in the Southwest, and cattle prices over the next few months fell back to exactly where they were before they started this. And for people that were in the $3,000 heifers and stuff, it was a pretty tough year for them, because all of a sudden they had all this anticipation of this market, and the market fell apart on them. But it's a really good story, I think, as you think about these markets and how quickly they can move. There's a lot of people playing in these markets, and I think there's a role for people that want to take all this risk. There's no doubt about that, but you got to be careful, I think. So I think in terms of these markets, I think knowledge becomes really crucial. I think I kind of focus a fair bit of what I do in just thinking about what's going on in the international markets. If we think about exports in particular, on the grain side of it, I'm pretty curious to know what's going on over in Central Asia, and probably with China these days and how much they're likely to purchase from us. The cattle market, I think everybody is pretty aware that Brazil, Australia become pretty important markets to know a little bit about what's going on with competitors in our export markets. Well, I wish I knew the details of all of this divorce that they had with China. I think initially it went beyond livestock products to other things that they were selling into China. I think their wine industry in particular was one of the issues. I don't know too much about it otherwise, but they ended up getting into this discussion about commodities in general going, from Australia and being imported into China. That I think I don't know, certainly a relatively high price I think paid by the Australians for losing that market. But yeah. The other one, in terms of doing other things that I think have some important impacts, I think, for the farm and ranch business. One of them is, and this kind of goes back to what we talked about before, but just focusing on issues of return on investment, how much money you're making versus the amount of money that you've put into this operation. So knowing kind of what your budgets look like. There's a place to go out and look at some of this benchmarking if you want to go out and see how other producers are doing. And well, in the states that surround us, Montana doesn't have any data that's in this, but you can go out. It's a University of Minnesota project, and you can type in FinBin, University of Minnesota, and it will allow you to go in and look at producers throughout the Midwest, and you can just take a look at crop budgets for those operations and see how they've been doing. These are all this information is coming from farm management associations. One thing that we don't have here in Montana, which we probably ought to have. Go through and obviously assess any trade-offs, in terms of business ventures that you might be thinking about doing, and then be in this mode where you're trying to grow your business. I think growing the business becomes a really important challenge, especially for you younger guys that are in this. I think you need to take a look at this farming operation or this of yours and figure out kind of where are you on this? Are you in a startup mode? Are you growing really rapidly, kind of in a growth mode? Or have you kind of reached this point over here where you're relatively mature and you're kind of riding this thing out? And have you reached this point over here where this business that you're in might be, kind of heading down the other side of this curve? I only show this because every business goes through this. I think it's really important to figure out kind of where you might be at, because again, going back to my experience with bankruptcies and people that have had really financial challenges, where would you guess that they're at on this curve right up here? Yeah, they're right here. They come into an operation that's probably doing just fine. And they've been in this cash cow sort of environment, and all of a sudden this cash cows are not doing so good because they haven't been very innovative in what they're doing. They haven't changed. They really haven't put their own footprint on what's going on in the business. And the business has, been in just a decline. And the reality of it is that once you start into decline and try to finance that business in other ways, like maybe getting in and playing the commodities market or something, all of a sudden life becomes very challenging because it becomes much more risky than it was before. So anyhow, I think it's important to kind of have a sense about where you might be at, and what are you going to do to put your own footprint on this business that you've in some cases inherited or purchased or whatever. What's going to be your footprint that's going to be on there? Okay, this is going to get down to the point that most important part of what I was going to talk about in some ways here, but risk management is really crucial, I think. If you think about, there's a handout that I gave you, you might take a look at in your spare time, but I think there's some parts of risk management I think that are really important. We tend to focus on the agricultural business. I understand that that's critically important, but there are other risks that are out there that are equally important for you to keep your eyes on. It's a little hard to read this slide that's up here, but I think if you were to look at this and think about, which of these risks up here concern you the most in the business that you're a part of, there's some issues around physical injury and just things like that that become really much more important than just about anything in terms of, because if you're not able to produce for various reasons, you probably are getting yourself in a really very risky management position. So we're not going to touch on all of those. Obviously, we don't have enough time to do any of that. But when I think about risk management, I really like this quote Warren Buffett put this out there some months ago and it's been circulating, but it's only when the tide goes out you discover who's been swimming naked. And this is the essence of risk management, because I think that risk management comes down into there's some ways of kind of protecting yourself. And this is kind of how I like to think about them. I think there's some risk management tools that are out there that have everything to do with the market. They're all decisions you're going to make about what you're going to produce, what inputs you're going to put into this production that you're involved in. These are all things that are private market sort of ventures. Those are things that you can make a decision. You can hire consultants or whoever else to help you make those decisions, but these are going to be market-based decisions. They're going to be your best guess about where you think the market's going to go and how well you're going to do in producing this crop or producing these calves that you're going to be trying to sell. When you move to the second tier of this, things change substantially, though, because at that point in time, you're asking somebody to share the risk with you. When you go out and buy crop insurance, you're saying, hey, I'm going to go out and pay some money for some crop insurance, but I'm going to share the risk of this crop with the taxpayers here in the United States because they're going to subsidize this for me. Or you're going to share it with an insurance company. If you're going to buy hail insurance, for example, you're going to go out and share that with a hail insurance fund here in Montana. So you have these opportunities, but you're getting into that. You're moving away from the private market handling all of this for you into a market that's really a public-private sort of venture where you're going to be having some other organizations going to be involved with you, and there's likely to be some public subsidy that surrounds that. We have some examples of that. Crop insurance, one of them. We'll go through a little livestock insurance example here in a few minutes, or just in a couple minutes. And then the last one of these, though, is I think the one that's the most risky, and it's the one I think that we spent a lot of time more recently kind of doing a lot of assessments on because there's been a lot of public money. This isn't a public-private sort of venture. This is public money that people are giving to you because they're going to subsidize what's going on in your business. And it's going to come in the form, one of them, this livestock forage program is the one we'll take a brief look at, the livestock indemnity program, another one. But this is cases where there's been a disaster and the U.S. Treasury has stepped up and paid those bills for you. So how important are these? As I told you before, I think the one at the top appears the most critical. I think markets are much bigger than everything else. Good decision making is much more important than anything else that's on the slide up here. You move to the second tier of that, you get somebody to help share in the risk with you. And the last one is this point in time where you're reacting to something that's happened. There's been a disaster of some sort and somebody's going to step in and bail you out. And you got to think about whether that's a good thing or not. That's it's a challenging decision to think about whether you want to have some room out there so that, people that were swimming naked out there are the people that are not going to be in business anymore. That's part of the capitalistic sort of model that we live with is this notion of creative destruction. That's where businesses that are, taking a lot of risk and the risk hasn't gone their way, that they're probably going to be doing something else apart from farming or whatever they might be doing where they've made these investments. So anyhow, a really important way to think about, I think, risk management. There's lots of programs that are out there. I put this only up because I spend a fair bit of my time working with small business ventures. This is kind of what small business people have available to them for financial support. They have a little bit, but hardly any. Have you heard about the Paycheck Protection Program that was part of this last little round of COVID money? That's probably the biggest piece of that. Agriculture has a lot of choices. And for good reasons. I mean, agriculture is, is a national security reason for agriculture. There's lots of good reason to believe that we need to have a good safety net under agriculture. And so we provide that. But it's very different from your downtown businesses. They're just very different in the subsidies that are available to them. So in terms of this issue around the drought, there is a couple of ways, and we'll take a really brief look at this because we're getting pretty close to the time and you guys would probably like to leave. But, drought is inevitable. They're going to happen on some kind of regular basis. How do you manage it? Well, you have these things that are market driven, given the feed costs that you might You know, the cattle that you might be thinking about either selling or buying, all those are market costs that you're going to, or market decisions you're going to have to make. And then you finally fall down to the bottom line out here where you get in this public-private partnership as well as this public funds that might be available to you if the disaster is serious enough. The one program that we're going to take just a really brief look at here is this pasture range and forage insurance product. This is an RMA product that's out there. Have any of you participate in this or buy any of this insurance? It's been around for a little while. They keep bumping the subsidy levels up on this to try to generate some interest. It's just, it's just an RMA, a federal crop insurance product. We'll see that you can select time periods to have this insurance make payments to you. We'll talk about that in just a second here. And it'll pay indemnities, or it'll pay payouts to you based on the 17 mile by 17 mile grid that's out there that the whole U.S. is kind of divided up into. And then these triggers are going to be based on rainfall. They're actually going to kind of go through an interpolation process with rainfall for your particular area. And if you happen to be relatively dry, you're going to get some payout out of this particular program. So this is the way this works. It's just for in drought conditions, especially like this year, some pretty substantial sort of payments. Here's what these loss ratios give you a sense about how valuable the insurance is to producers. The loss ratio is just the amount of money that's paid out divided by the amount of money you paid in premiums. So all these numbers over here that are bigger than 1, here's 1 right here. All of these years, starting with 2010, the payouts on this have, been